Imagine earning $60,000 a year and ending up with just $150 in your savings account. It sounds like a mistake, but for millions, it's reality. Let's start with something uncomfortable, the truth. We're not just talking about falling behind. We're talking about an entire generation slipping into a financial quicksand with no rope in sight. Every day, more people are waking up and realizing their bank accounts aren't growing. They're shrinking. And the worst part, it's not because they're irresponsible. It's because the system is quietly squeezing them dry. In this video, we're going far deeper than just showing you that the savings rate is low. We're peeling back the layers to expose why it's happening, how it's affecting everyday people, and what you can do to escape this financial trap before it's too late. No fluff, just real talk. So if you've ever looked at your paycheck and thought, where did it all go? Keep watching. Let's get into the numbers first. According to recent data, the average American is saving only 3.6% of their income. To put that into perspective, if someone earns $60,000 a year after taxes, they're setting aside just over $2,100. Not monthly, annually. That's barely enough to cover a single emergency, let alone build a future. Compare that to what most financial planners suggest, saving 12% to 20% of your income. That means the average person is saving less than a third of what they probably should be, but that's just the tip of the iceberg. Because what's driving this low savings rate isn't just lack of discipline, it's the collision of rising costs, stagnant wages, and cultural pressures that no one wants to talk about. Let's start with the obvious. The cost of simply existing has skyrocketed. Rent for a modest two-bedroom apartment in many cities is now upwards of $2,400 per month. That's without utilities, internet, or even groceries. And for those trying to buy a home, interest rates hovering around 7.2% have added hundreds, sometimes over 1,000, to monthly mortgage payments compared to just a few years ago. It's no longer about owning a home. It's about surviving inside four walls. Now layer in the rest. Child care for just one toddler, easily $1,300 a month in many states. Got two kids? That's a second mortgage. Health insurance premiums? Even with employer support, families are shelling out $700 to $900 a month, and that doesn't include deductibles or co-pays. And don't even get started on groceries, which now feel like a luxury purchase. And through all of this, wages are barely moving. In fact, a huge chunk of the population hasn't seen a real raise in purchasing power in over a decade. That means that for every dollar you earn, it buys less than it used to. You're not lazy. You're not spending like crazy. The game has simply changed, and most people don't even realize they're losing. But here's what's even more worrying. We've normalized it. People are starting to accept that living paycheck to paycheck is just the way things are. That being broke is just part of being an adult. And when that mindset settles in, that's when the danger really begins. Because it doesn't just affect your wallet, it affects your future, your stress levels, your relationships, and your ability to plan for anything beyond the next week. But it's not all doom and gloom. You still have more control than you think. We'll talk more about that in the next section, including how behaviors and mindset shifts can start to reverse this trend, even when the numbers feel stacked against you. Let's talk about something that's quietly become one of the most destructive forces in our financial lives. Lifestyle pressure. It's not just inflation or stagnant wages hurting people. It's the invisible need to look like you're doing okay, even when you're barely staying afloat. We've reached a point where owning the latest phone, driving a shiny SUV, or posting brunch photos from trendy spots feels less like a choice and more like a requirement. And behind those images, monthly payments, credit cards, personal loans, financing plans, all for the sake of staying current, staying seen. Let's take a real-life example. Imagine a 35-year-old teacher in a mid-sized town. She drives a car that costs her $710 a month, has $22,000 in student loans, and pays $1,900 in rent. She's doing everything right, working full-time, contributing to her community. But after bills, debts, and essentials, there's nothing left. Not because she's irresponsible, but because the math simply doesn't add up. And this isn't rare. In fact, the average new car payment in the US is now over $780 per month. For many households, that's just one of two car loans. Add groceries, insurance, internet, credit card payments, streaming subscriptions, and a single night out per week. And suddenly there's no room to breathe, let alone save. But it's not just about money, it's about the way we think. The way we've been conditioned. Somewhere along the line, we stopped asking, do I really need this? And instead started thinking, well, everyone else has it, so I probably should too. It's not entirely our fault. The system is designed to feed this thinking. Social media constantly showcases the highlight reels of people's lives, vacations, cars, clothes, without showing the debt behind it. Credit card companies and lenders hand out money like candy, celebrating approvals like it's an achievement, and retail therapy is sold to us as self-care. But here's the truth. No one likes to say out loud, debt is a thief. It steals your ability to build wealth, robs you of peace, and change your future to past decisions. And worst of all, it disguises itself as comfort. We've turned to credit to fill every gap. Can't afford a vacation? Put it on the card. Need a new laptop for work? Finance it. Want to upgrade your kitchen even though it still works? Just take out a personal loan. And before we know it, we're making payments on the past instead of preparing for the future. But here's where the shift begins. Because knowledge is power, and you're here, which means you're ready to do things differently. Let me ask you something. What's one expense you regret the most? Not to beat yourself up, but to recognize the patterns. Drop it in the comments. Let's start a real conversation. Because we're not just here to judge, we're here to learn. Together. And if this is hitting home for you so far, take a second to like the video. Not just for the algorithm, but because more people need to see this. And don't just scroll. Join the conversation. Whether it's a financial mistake, a money lesson you learned the hard way, or something you're proud of, share it. You never know who might read it and feel less alone. And of course, if this kind of content makes you think differently, subscribe to the channel. Not because it helps me, though it does, but because it helps you stay focused on a better financial path, 1 week at a time. In the next part of this video, we're going to talk solutions. Not vague advice like, just save more, but actual steps you can take, no matter your income, to rebuild a savings habit, and maybe even enjoy the process. Okay, so the savings rate is down, debt is up, people feel stuck, but now comes the part that most videos don't talk about, the part where you actually start to change things. Let's clear something up right away. Saving money isn't about deprivation. It's not about never having fun again or cutting every coffee. It's about regaining control, about buying freedom, not things. Every dollar you save isn't just sitting in a boring account. It's working for your future self, protecting you from surprises, buying you options, time, flexibility. The first step, clarity. You can't hit a target you can't see. Most people have no idea how much they need to save, so they don't even try. But just getting a rough number changes everything. For example, if your goal is to have a $10,000 emergency fund and you can save $250 a month, that's 40 months, just over 3 years. But now, it's real, it's trackable, it's doable. And that's the magic of small steps. Because once you start, even with $50 a month, you build momentum. You prove to yourself that you're someone who saves. That identity shift is more powerful than any budget. Next, create barriers between you and your spending triggers. That could mean deleting shopping apps, unsubscribing from promo emails, or setting a 24-hour cool-off rule before making big purchases. You'll be shocked how many things you don't buy just by waiting a day. But here's the big one. Increase your income. It's a lot easier to save 15% of your income when you're earning more. And no, that doesn't always mean getting another job. It could mean negotiating a raise. It could mean freelancing a skill you already have. It could mean finally starting that side hustle you've been thinking about. The point is, you're not stuck. Even something like selling unused items around your home can give you a quick win and a burst of momentum. One person in this community shared that she sold an old treadmill and used that $300 to start her emergency fund. That small win completely shifted how she saw herself financially. Also, get accountability. Whether it's a friend, a partner, or a group online, talking about money removes shame. It turns saving into a shared mission, not a solo struggle. And when you celebrate small milestones, like saving your first $1,000 or paying off a credit card, you remind yourself this works. But the most underrated saving strategy of all? Gratitude. That's right. Practicing gratitude for what you already have makes you want less, and that's powerful. You start seeing your old car not as outdated, but as paid off and reliable. You start appreciating your apartment, your meals at home, your quiet nights in, And suddenly the urge to spend just to feel good, it fades. Because the truth is, the best things in life aren't bought, they're built. And if this video connected with you, I want to say thank you for being here. Not just watching, but really thinking about your future. That takes guts. If you haven't yet, subscribe to the channel, not just because it helps us grow, but because you deserve to be surrounded by content that uplifts you, educates you, and respects your goals. In the comments, tell us, what's one financial lesson you've learned the hard way? Or the one tip you wish someone had told you sooner? You never know who might need exactly what you have to say. This is more than just a video. It's a space where we learn, grow, and build something better together. Drop your thoughts, your stories, even your questions below. Let's make this community the support system we all wish we had when we were starting out. Until next time, save smart, live well, and never forget that your money should serve you, not the other way around. If you're serious about building a future you actually want to live, don't stop here. In this video, we showed you how to take control, but the next step is knowing what you're really aiming for. So choose your next move. Want to know what retirees actually earn and why it shocks so many people? Tap "How much do retirees really make?" and see the real numbers they never taught you. Or maybe you're wondering if $500,000 in the bank could set you up for life. The answer might surprise you, and it might just change your goals forever. Click one. Watch it. This could be the moment where your entire financial future clicks into place.